Hi, welcome to HouseFlippingSpreadsheet.com. You're watching a brief video tutorial on how to set up the property information sheet. The first step in analyzing a rehab deal is to set up your project on the project information sheet. You can access the project information sheet from the Welcome dashboard or from the gear icon located in the upper right-hand corner. The property information sheet is where you will set up your property information, your project financial information, your financing information, comparable sales, and company information. The first section is the property information section, where you will set up the property name, property street address, the subdivision or neighborhood, the school district, number of beds, baths, and square footage. This general property information will not be used for any of the data calculations, but it will be important to report the different property information such as the property street address, the neighborhood and number of beds, baths, and square footage of the property on the different reporting options that we have throughout the spreadsheet. The next section is the project financial information section, where you will set up your project schedule, your after repair values, and your holding costs, which will be used to determine the maximum purchase price you should offer for a property. On the left hand side is where you can set up your project schedule. So you'll be able to set up your rehab schedule and the length of time you think it will take to list the property and sell the property to the end buyer. The rehab schedule is basically going to be the amount of time you think it'll take to repair and rehab the property. The time to sell and close is the length of time you think it will take from the initial listing day in open house to the day that you actually close on the property and hand over the keys to the end buyer. The rehab schedule and time to sell will be added up to give you your total project schedule. This total project schedule will be used to calculate your total holding costs for the project. Next, you can set up your after repair value. The after repair value is the value you think you can resell the property for after you've rehabbed the property. The after repair value is a required field because the after repair value will be used to help calculate the maximum purchase price you should offer for a property. The asking price is the seller's asking price that they are currently asking for the property, and it's really just used as a placeholder so that way you can compare your maximum purchase price against their asking price. But it will not be used in any of the calculations to determine the maximum purchase price of the property. Once you've input the after repair value, you can input your holding costs, which are going to be your taxes, insurance, maintenance, and utilities that you'll pay on a yearly or a monthly basis. This holding cost information will be carried over to the Rehab Analyzer, where it will convert these holding costs into a monthly cost and then multiply it by your total project schedule to give you your total holding cost for the project. Once you set up your project financial information, you can move on to the financing information to set up how you're going to fund and finance your project. If you are an all-cash investor, then you can select all cash from the drop-down menu and essentially move on to the next step. But if you're going to be receiving outside financing or funding for your projects from a lender or an investor, you'll select finance from the drop-down menu, which will provide you with additional options for setting up your funding and financing for your project. The financing section is pre-built with 4 different calculated financing amounts based upon the maximum purchase price and estimated cost analysis. The purchase price only loan value is based upon the maximum purchase price analysis that's performed on the Rehab Analyzer. This purchase price value is just a pending placeholder, and it will change depending on your repair cost estimate and the maximum purchase price analysis that's performed on the Rehab Analyzer. The next loan option is for the repair costs only. So the repair costs are based upon the estimated repair cost values from the repair cost estimator. Our repair cost loan value is currently 0, but once we perform our detailed repair estimate using the repair estimator, the loan value will populate. The next loan option is all project costs. This loan value would be for all project costs to finance the project, which would include your purchase price value, which is essentially the maximum purchase price, your buying costs, your holding costs, and your repair costs. Again, these project values and costs are pending based upon your repair cost estimate and the maximum purchase price analysis you'll perform using the Rehab Analyzer. The final calculated loan value is for your after repair value, which is based upon the after repair value which you input into the project financial information section above. If you don't want to use the calculated loan amounts, you can input your own specific loan amount to finance the project. Our private money lender generally will lend us 70% of the after repair value, so we're going to select the after repair value as our loan basis. Once we've selected the loan amount, we'll need to input the length of the loan or the amount of time we plan on making payments for the loan. For this project, our project schedule is only 5 months, but our lender's requiring us to make 6 months worth of payments, so we'll plug in 6 into the length of loan cell. Once we've selected the loan amount and set up the length of the loan that we'll be making payments, we can set up the financing terms. Generally, a lender will require you to have equity in the deal, so you can input your equity into the deal either through a down payment or through a loan to value ratio. If you select down payment from the drop-down menu, you will be required to provide an upfront cash down payment to originate the loan. If your lender lends based upon a loan to value ratio, select LTV from the drop-down menu, and then input the loan to value ratio that your lender requires to finance the deal. The spreadsheet will then automatically calculate the down payment amount or the loan balance after the loan to value reduction. This loan balance will be used as the loan basis for calculating your total monthly interest payments and the lender points for originating the loan. Next, you can input the interest rate that the lender is charging to finance the project. These interest payments can be made monthly or rolled into the back end of the loan. If you select Rolled from the drop-down menu, these interest payments will be added to the loan balance, and those interest payments will be paid out of the proceeds of the sale when you sell the property. Next, you can input the amount of points that you'll be paying to the lender to originate the loan. Points can either be paid up front out of your cash, or points can be added to the loan balance and paid out of the proceeds of the sale. The final financing option is to offer a profit split to your lender or business partner. To incorporate a profit split, select Yes from the drop-down menu, and then input your percentage of your profit split, which will automatically calculate your profit share and your lender's profit share on the project. Once you've selected your loan amount and set up your financing terms, the spreadsheet will calculate your financing results. So it'll calculate your total interest, your total points, profit share amount, as well as your total financing costs. It'll also give you a breakdown of what the loan basis or loan balance is, how much your down payment is, the points and interest that's added to your loan balance, and what your final loan amount is once you add in those additional points and interest. If your projects will be requiring multiple sources of funding, you can set up a second loan. The second loan option gives your business the ability to have 2 separate loans with different terms. So your first loan could be for the purchase price value, and then you could select the second loan for your repair costs, and then have separate terms for each of those loan values. Once you've set up your financing information for Loan 1 and Loan 2, your total financing results will be calculated at the bottom. The total financing results give you a total of your interest, your points, profit share, and your total financing costs for originating the loan. It also provides a detailed financing breakdown showing the initial loan amount that you'll be requesting, any down payments that you'll be paying to the lender, any points or interest that's added to the loan balance, and what your final loan balance will be for financing the project. It also provides a breakdown of the loan amounts for Loan 1 and Loan 2 to give you your total financed amount. This total financed amount will be deducted from your total project capital costs to give you your total cash outlay required to finance the project. Once you've set up your project financing, you can move on to the comparable sales information. This comparable sales information will be used on the maximum purchase price report and the investment report to show the comparable sales data that was used to estimate your after repair value. Please note that the comparable sales information is not a required field to be filled out. It's strictly for informational purposes on those investment reports, and it will not be used to calculate or estimate the after repair value or used in any of the deal analysis or maximum purchase price calculations. Once you've filled out your comparable sales data, you can move on to your company information, which is where you'll input your company name, street address, and contact information for your company. This company information will be used on all of the different reporting options you'll find throughout the spreadsheet. So you can brand all of the different reports with your own company information and contact information on the different headers and footers throughout the spreadsheet. Now that we have set up the property information sheet, we can move on to the next step of the deal analysis process, which is going to be creating a detailed repair estimate using the repair cost estimator. If you have any questions about any of the processes that we went through today on setting up the property information sheet, please shoot us an email or give us a call.